Hi boys, I hope you are doing very well. This week we are going to focus on posting what we call the big 6 accounts. Now, there's a very specific reason why I've chosen this as the background to my slideshow, and it's all because of this picture here. Okay, so if you read that, it says, have you ever tried, ever failed? No matter, try again, fail again, but fail better. Okay, so many of you have struggled with the posting informal assessment that was on Google Classroom last week, but that's okay. This week, I want you to try again with posting, and you might fail again, but at least, hopefully, you will fail better. Now, there are 6 general ledger accounts that we will focus on in Form 2. Okay, really focus on, and we will spend some time with them from now onwards, and those are trading inventory, debtors control, bank, creditors control, sales, and cost of sales. Now, these ones are the most complex of everything that we've done so far in the general ledger. And the reason why we focus on them is because if you are able to post them to the general ledger, then it shows us that you understand the fundamental principles of the general ledger. So from now on, we will only test these 6 accounts. The exercises that you will do this week will only have these 6 accounts as well. Okay, and there's great news because we've narrowed it down for you. And if you don't understand posting, if you're one of those boys that really tried, but it doesn't make sense to you, it's not logical, you have no idea what you're doing, then you can actually study the format of these accounts. Okay, and that's what this whole presentation is about, is I'm going to teach you the formats and I'll give it to you, and I'll also just post a normal document that you can print out, and you can sit on your butt and you can study the formats. Okay, off by heart. You can study the wording in the details in the folio columns for each of these 6 accounts. And when you get to your exam in November, you can sit down, open your answer booklet to the general ledger question, and copy and paste what you've studied in there. And you will get at least 50% for your posting question, because 50% of the marks of a general ledger question is for what you write in the details and the folio columns. Okay, so my point is, if you don't understand it, don't give up. You can still get 50% for just this question in your exam. Now, the first one is trading inventory. Okay, so trading inventory, hopefully all of you know by now that it's an asset. Okay, and that's important because if you know that it's an asset, you know that it's part of the group that we call dead. In other words, the group that increase on the debit side. Okay, so it's important that you know where the plus side of trading inventory is and where the minus side is. The plus is on the debit, the minus is on the credit. Trading inventory is part of the balance sheet section. That's why I called it B1. This is important because there's a little bit of a difference between what we write for the opening balances for the balance sheet section and what we write in the nominal section. Okay, you don't need to know that it's the balance sheet section. You just need to notice it in your exam because I will write balance sheet section for you. Okay. Then, every single time when we work with trading inventory, I want you to picture your storeroom. Okay, so this is the last attempt I'm going to have at explaining it to you. If you still don't understand it, just study the wording as it is on this slide. Okay, so every business starts with something in their storeroom. Okay, a business that I've operated before, that's not a brand new business. We don't deal with brand new businesses in Form 2. Okay, so every business that operated before will start the month with some products in their storeroom. However, your general ledger account will be empty, so it won't reflect those products, and you have to go and write the value of the products in our storeroom in your account, and that is the opening balance. And as you know, opening balances always go to the plus side. It's always on the first of the month and year that we are working with. Be careful, the month and the year might be different in every question. Okay, and then because it's in the balance sheet section, we write balance brought down. Okay, this is something you must study. And then you just write the value. The value will be given to you in the information section of your question. Then there are actions that the business can take to increase the amount of products in their storeroom. Okay, they can buy stock, as simple as that. And if they buy stock, there will be more stock in the storeroom. In other words, it goes to the side where the storeroom increase, the debit side. And we've got two options when we buy. We can either buy and pay right now by making a cash payment, so it will be recorded in the cash payments journal. Okay, or we can buy and we can pay later. In other words, we are buying on account. Okay, so we will owe the person money and it will be recorded in the CJ. That's it. That's the only things that we can do to increase the amount of inventory in our storeroom. By using cash, okay, so that will be the CPJ one, or buy on credit, the CJ one. You will notice there is a trading inventory column in the CPJ. That column's value is what you write here next to the CPJ. You will also notice there's a trading inventory column in the CJ, and that's the value that will go here where you write CJ. Because they are columns, we post it on the last day of the month, the 30th. And every single time when it's CPJ in the general ledger, what do we write in details? Bank. Why? Because the money we get to buy stock in cash will come from our bank. And if we write CJ, then in details you will have to write creditors control. Because if you buy without paying, you owe money to a creditor. So it goes to creditors control. Then the business can also do something to decrease the amount of products or stock or inventory in their storeroom. And that is if they sell products. Okay, so if we sell, we get money, yes, but the cost of our sale is that a customer is walking out with a product. In other words, we have less products in our storeroom. Okay, I tried to circle the minus sign there. Let me try again. We've got less products in our storeroom. So our trading inventory decrease. Okay, and I just said that is the cost of our sale. Okay, so the details on the credit side of trading inventory will be cost of sales. But you will notice there are two cost of sales columns. There's one cost of sales column in the CRJ. Okay, that's when customers buy products from us in cash. In other words, we've got a cash sale. And there's a cost of sales column in the DJ. That's when customers buy from us on credit. In other words, we make credit sales. You take those two cost of sales columns and you write them on the credit side of trading inventory. Please don't forget that it's the first time we're working on the credit side in this account now. So I want you to write June 2020 and the 30th again. And that's it. Then the only thing you need to do is you need to balance the account. If you don't know how to balance, please send me a message. But we've done this since Form 1. The next account that we're going to focus on is debtors control. Now, debtors control is also an asset. In other words, it's part of the group that increase on the debit side and decrease on the credit side, and it's also part of the balance sheet section. Now, the association that I want you to make with this account is that this account represents people that owe us money. And usually when the business starts a new month, people already owe them money. But that won't be recorded in your general ledger because your account will be empty. Okay, so you need to go and record that in there. And the money that people owe us when the month starts is the opening balance. Okay, and you know that opening balances go to the plus side of the account. It's on the first of the month and the year. Be careful, the month and the year can change. And we always write balance brought down in the balance sheet section. Something that you must study. Okay. Then there are two types of interactions that the business can have with people that owe us money. We can either sell to them on account. And if we sell to them on account, they will owe us even more money because we are selling to them on credit. They're not paying us right now. Okay, and credit sales are recorded in the DJ. Okay, so the sales column in the DJ will go to the side that increase the amount of money that people owe us. And the contra account is sales. Why? Because they owe us more because we made a sale. And it's a column total. That's why we post it on the 30th. But there is something that they can do to owe us less money that we will record on the side where debtors control decrease. And that is if they actually pay us back. Now, if they pay us back, we will receive money from them. And if we receive cash from anyone, we record it in the cash receipts journal. And the cash that we receive from them will be put into our bank account. So for this, we will actually, you will see there's a debtors control column in the CRJ, and that value must be posted here. Okay, because the debtors control column in the CRJ means we received money from a debtor because they paid us back, and it decreases the amount of money that they owe us. Please remember when we are working on a new side of an account to just write the year, the month, and the date again. And then you just balance. Then the next account is bank, which is super easy because you've been doing it since Form 1 and it doesn't change. It never changes, not even up until Form 5. Okay, so bank is also an asset which is part of the group that increases on the debit side, decrease on the credit side, and it's balance sheet account number 3. Now, you always start your business or the new months of your business with money in the bank account. There must be some money in the bank account, and that will be the opening balance. The opening balance is posted on the plus side on the first of the month in the year, and you write balance brought down. Can you see it's very repetitive? It's been the same for the previous 2 accounts. Then, what can you do to have more money in your bank account? You can earn money. And if we earn money, okay, another way of saying that is saying that we are receiving money or receiving cash. In other words, this will be from the CRJ. And you will notice there's a bank column in the CRJ. And that's the column that we will post here on the plus side of the bank account. And we can earn money for various reasons. It can be the owner paying us some capital, or making cash sales, or earning rent income, or whatever. Okay, and we don't write them all individually. We just say total receipts. And it's because it's the bank column total, we post it on the 30th because that's the last day in June. Then the business also spend money, and if we spend money, it will decrease the total amount of money that we have in our bank account. Okay, another way of saying that we are spending money is saying that we are making payments. What type of payments? Cash payments. Okay, so that's why the cash payments journal is on the credit side of bank. Okay, you will notice there's a bank column in the CPJ. That's the column that must now be posted here. And we can make many different types of payments. Payments for accounts like water and electricity or telephone. Payments when we're buying stuff like stationery, equipment, trading inventory, etc. And we don't write all of them individually. We just say total payments. And that's it. That's what you write in your bank account. And then you just balance it. Okay. Please don't write anything else in here. Some of you think that it should be more complicated. So you write debtors control or creditors control or other stuff in here. Please don't. It's just like this. Then the next account is creditors control, which is the only liability that we're going to deal with in Form 2. Okay, liabilities is the L of click. So this account increases on the credit side, decreases on the debit side. Be careful. Many boys just continue like they've done with the first 3 accounts and they make the plus on the debit side, which will be wrong. It's still a balance sheet section. Okay, so the opening balance will still say balance brought down. Now, I want you to associate this account with people that we owe money to. It's just the opposite of debtors control. Okay, and usually businesses start the month by already owing some of their suppliers money. That is an opening balance, and the opening balance goes to the plus side of the accounts, Okay, on the first day of the whatever year and month the question is on. And because it's balance sheet section, you write balance brought down. Then there's one thing that we can do that will cause us to owe even more money to people. And that is if we buy on account. Okay, so if we buy on account, we will owe even more money, and therefore all of the things that we buy on accounts will go to the credit side of creditors control. The only journal that we can buy on accounts in is the CJ, okay, the creditors journal, because people that we buy on account from is called our creditors. And we can buy many different things. We can buy equipment or stationery or whatever, okay, and we don't list them individually. We take that creditors control column in the CJ, that value, we write it here, but we say total purchases in the details column. Then we can pay the people back. We have to pay our suppliers back eventually. And if we pay them back, we will do that in the cash payments journal using money that we got from our bank. And if we pay them back, it will cause us to owe them less money. That's why it goes to the side where creditors control decrease, which in this case is the debit side. Just remember, because you're working on a new site, to write the year, the month, and the date again. Okay, so in other words, the creditors control column from the CJ goes to the credit side of creditors control, and the creditors control column from the CPJ goes to the debit side of creditors control. And then you just balance the account. Now we get to our two nominal accounts, the income and expense accounts. The one is sales, which is an owner's equity income account because we're earning money. And because it's an income account, the I forms the I of click, so it also increases on the credit side. Nominal account number one. Now, something that's very important with income and expense accounts in Form 2 level is that we only ever write on one side of these accounts. Okay, so we will only work on the plus side. There will be nothing on the minus side. If you want to, you can draw a nice little cross through the debit side of sales because you should never work there. I gave this tip to my Form 2s last year, and when they started doing that, things got better. Okay, now sales will have an opening balance because we will have to record all of the sales that we've done so far this year. Okay, so when this month starts, we already made a few sales in the previous months, and that opening balance will be given to you, and you have to go and record it on the plus side of the account on the first of the month and the year. But now remember, because sales is a nominal account, you don't write balance brought down, you write total brought forward. It's a little bit of a nitty-gritty, unnecessary accounting detail, but it's something you need to study, otherwise you're going to lose marks. Okay, now we can sell to customers that pay us in cash. Okay, so there will be a sales column in the CRJ. That's when we make cash sales, and we will put that money in our bank. So the sales column from the CRJ, you will write bank CRJ. Then we can also make credit sales, and if we make credit sales, people will owe us money, and those people are called our debtors. So it goes to the DJ. That's why the sales column from the DJ also goes to the sales account. And now please don't write bank. Many people will write bank here. You write debtors control. Why? Because we haven't earned the money yet. The people owe us money. Okay, and we said if people owe us money, they are debtors. And that's it. And then you just total the accounts. Okay, it doesn't even matter. You can swap these two around as long as it says bank CRJ and debtors control DJ. And then lastly, we've got cost of sales, which is an expense account. Now, expense accounts form the E of dead, so they also increase on the debit side, decrease on the credit side. Expenses are also part of the nominal section. And remember what I just said about the nominal section? We only work on the plus side of nominal accounts in Form 2. So you can go and draw a nice little cross through the credit side of cost of sales. We will never work on that side. If you start a new month, there will already be an opening balance for cost of sales, and the opening balance will go to the plus side. So you will write June 2020 the 1st, or whatever month and year was given to you, But remember, because it's the nominal section, you write total brought forward. And what did we say before? The cost of every single sale is that we are selling trading inventory. Okay, so remember, cost of sales is the exception to the entire accounting rule. And cost of sales always goes with one account, with trading inventory. Okay, so the details that you will write in cost of sales will always be trading inventory. Now you will notice that there are two cost of sales columns because there's a cost of sale to, there's a cost to our cash sales. So that will be the cost of sales in the CRJ. And there's a cost to our credit sales, which will be the cost of sales in the DJ. But the cost of the sale stays the same. It's that we're losing trading inventory. So that's why you will write trading inventory DJ and trading inventory CRJ. I hope that made sense. So you've got the two cost of sales columns, the one from the CRJ, you write trading inventory CRJ, and the one from the DJ, you write trading inventory DJ. You write the amounts and you total them. And that's it. As easy as that. I hope you understand your ledger now.